Let's talk about something that for a lot of people feels like this huge, intimidating mountain to climb: investing. But here's the thing: what if there's a really simple, well worn path to the top? One that doesn't require you to be some kind of financial wizard.
Yeah, I know. The second someone says investing, your brain probably pictures those crazy scenes on Wall Street, right? People yelling, charts with a million squiggly lines. It's a whole world of jargon that honestly feels designed to make you feel like you can't participate. It just seems way too complicated. But what if most of that is just noise? What if there's a super straightforward and really powerful strategy that tons of financial experts actually recommend for building wealth over the long haul? Well, according to the sources for this explainer, there absolutely is.
Okay, so let's get right into it. The core idea, the big recommendation we're going to unpack here, is a strategy called passive investing. So, what on earth does that actually mean? Well, a passive strategy isn't about trying to be smarter than everyone else or picking the next hot stock or trading all the time. Nope. The whole goal is to grow your money over the long term by basically buying and holding on, capturing the performance of the entire market or at least a huge chunk of it. That sounds great, in theory, but how do you do it? Like, what's the actual tool you use for this? Well, that brings us to something called the index fund. The key that really unlocks this whole strategy is a thing called an index fund. And probably the most common, easiest way to access one today is through an ETF, which stands for Exchange Traded Fund. This is the vehicle that makes passive investing possible for pretty much everyone. And this is where it gets kind of mind-blowing. Let's look at a real-world example from our source material: a total market index fund like VTI. This thing doesn't just hold a few big companies you've heard of. We're talking about thousands. Seriously, over 4,000. Just let that number sink in for a second. With one single click, one purchase, you instantly become a tiny owner in more than 4,000 different companies. I mean, that's the incredible power of this simple tool. You know, a really good way to picture this is like a pre-made shopping basket. Instead of you having to go down every single aisle in the store trying to pick out the best of every single item, you just grab this one basket, and boom, it already has a little bit of almost everything the store sells. Okay, so you've got the strategy: be passive. You've got the tool, the index fund. But you don't just grab one random basket. For this to really work, you need a balanced portfolio. So let's see what that global mix looks like. So the recommended portfolio is this global mix, and it's all about balance and not putting all your eggs in one basket. As you can see, it's usually built with three main ingredients: a big slice of US stocks, another pretty big slice of international stocks from all over the world, and then a third piece in bonds, which adds a bit of stability. This way, you're not just betting on one country's economy, your investment is spread all across the globe. So why? Why go through all this? What makes this strategy so powerful? Well, it really comes down to two huge, massive advantages that work together perfectly: diversification and super low costs. Okay, first up, diversification. Just think about the risky game of pouring all your money into one single stock. Sure, if that company takes off like a rocket, you feel like a genius. But if it tanks, you could lose everything. Now compare that to being diversified. When you're spread across thousands of stocks, if one or two companies fail, it barely makes a dent in your overall portfolio. It's like building on a foundation of solid rock instead of sand. So that's benefit number one: broad diversification. The second one is just as important, maybe even more so over the long run: crazy low fees. Now, I know low fees doesn't sound very exciting, but trust me, this is the secret weapon of the whole strategy. See, because these funds basically run on autopilot, they don't have expensive managers to pay. So the fees are tiny. And that tiny difference doesn't just save you a little money, it makes you a lot of money. Over decades, those fees you didn't pay stay in your account, earning their own returns and compounding into tens, maybe even hundreds of thousands of extra dollars for your future. It's just magic. All right, let's just put a bow on this whole thing. Here's the entire strategy boiled down to three simple steps. Number one, adopt that passive, long-term mindset. You're in it for the long haul. Two, use the right tool for the job: a broad market index fund or ETF. And three, build yourself a smart, diversified global portfolio. That's it. That's the blueprint. So there you have it. No secret stock tips, no complicated charts, just a simple, disciplined, and really powerful way to build wealth over time. The real question isn't whether it works, it's whether this simple strategy could be the right path for your long-term success. And according to our sources, it's definitely an idea worth looking into. Thanks for tuning in.